Welcome to Founderology, built to break through, where we talk with both founders, growth leaders who have built it, scaled it, and sold it, and who are here to share exactly what it takes to do all the same. My name is Kathleen Wood, and I'm the founder of Kathleen Wood Partners, a strategic growth firm that works with founder-led businesses to propel them to new levels of success and scalability. I'm also the co-host of the Founderology Growth Summit, an exciting event that we're hosting in February of 2026, bringing together visionary restaurant founders to share tips, techniques, and the inside track for accelerating their businesses. And today, our guest is really a great one. He's a great friend and truly a great leader in the world of consumer brands, strategy, and investment grade growth. Please welcome Wayne Vasick, Managing Director and Practice Group Head for the consumer team at the Founders Advisors. Wayne brings more than 25 years of experience in M&A, corporate development, and strategic planning for consumer-oriented businesses, including leadership roles at Bain & Company, FedEx, Tempur Sealy, Varsity Brands, and Lowe's Home Improvement. I am sure you are already impressed with Wayne as I am, and I still have a little bit more to say. So he's led major projects like the acquisitions of Sealy by Tempur-Pedic, creating the world's largest bedding retailer, and the multi-billion-dollar sale of Varsity Brands to Bain Capital. Today, Wayne leads Founder Advisors consumer practice, closing multiple transactions for founder-led businesses across retail, hospitality, residential, and consumer products. He's also the proud sponsor and supporter of the Founderology Growth Summit, where not only is Wayne going to share amazing insights today, but he is bringing it all to the Founderology Growth Summit, where he will continue to share his insights, his experience, and the answers you're looking for to accelerate your business to grow smarter, scale faster, and position your company for investment grade success. So Wayne, thank you so much for your support. Thank you so much for being here today.
I'm so excited about Founderology here. I guess we're just a few months away, and looking forward to joining you and meeting our founders, and just being part of Founders Advisors. It couldn't be a better match.
Oh my God.
We focus on founder-owned companies, and so just love everything that you and the team are doing with Founderology.
Well, thank you so much. And we couldn't do it without you. And our companies have a long history of working together because of our shared vision of wanting to support founders. So before we dive in today, I wanted to see, is there anything, you've had an amazing career and the work you're doing at Founders Advisors is so powerful. I just want to make sure, is there anything else you want to share about your background or what you're doing at Founders Advisors today?
Yeah, absolutely. So here at Founders, what we do is we really focus on founder owners of businesses, and we love to build those relationships with them years in advance before they're ever looking to go do anything. And where we specialize is when a founder owner is ready to go sell their business. We prepare their business to go to market. We find the right buyers. We tell that story for them. And really that's where we lean in and love to serve founder owners. I'll tell you a story, this was 25 years ago. When I started, I was a consultant. I was serving clients, and I had my first venture into private equity. And I didn't do my diligence when I joined this firm, and we really, we didn't. The firm I joined didn't take a founder first focus. It was the opposite. And I quickly learned early on in my career I wanted to be on the side of helping founder owners. We love private equity, we love investors, but what I enjoy most is serving founder owners and helping them navigate the capital market. So that's a little bit about me and what we do.
Right. And Wayne, I think that's why we have both of our organizations have so much in common, because we're both trying to serve founders to find their success, to find their scalability. But also what I really value so much about our relationship is also how much you all do to help those founders find the right value equation when they go to have a financial transaction or take it to another level in their growth as well. And I think one of the most powerful, not only all of your experience and the team that you have at Founders Advisors, but one of the most powerful tools that I've come to appreciate, and so have so many of my clients have appreciated all of you, and the investor grade assessment tool. Mm-hmm. And I thought, because everyone that comes to the Founderology Growth Summit is going to, thanks to your generosity, and everything that you do, everyone's going to get the opportunity to take that investor grade assessment before they come to the Founderology Growth Summit. So I thought maybe we could take a couple of minutes today, though, to talk about what that is and why that's so important to founders who are looking to scale and grow their businesses.
Yeah, I mentioned we love getting to know people early. and just helping them add value to their business. And so when you think about what is the investment grade assessment, so this was a tool. It originated one of our partners, Zane Torrance. He wrote a book called 17 Reasons, and in that book, he came up with what are all the different criteria that makes a business investment grade. And so we all understand, a publicly traded company, they're trading on the public markets because they've done certain things. They have quarterly earnings. They have a board. They have a clear 5-year strategy. They know where they're going and how they're going to get there. What we do with small business owners in this investment grade assessment is we give a small business owner a tool where they can measure how they're doing across those 17 dimensions. And so I'm not going to go into all the questions that are in that survey. It takes about 15 minutes. It goes by really quickly. But when folks fill out that survey, you get an output, and it grades you on a scale of 1 to 100. And we're tough graders. Anything above a 70 is a good grade. And but it's where am I green, where am I yellow, and where am I red? And really across those different areas, we look at things like finance. What are your growth plans? Do you have a team? Do you have a bench of leaders who can follow you if one day, you're looking to go manage other businesses or you're looking to take on a board role? What is your technology? What is your process? Are you prepared to go to market? And so we grade folks across all these criteria after this 15-minute survey, and you answer different questions. And then where are the areas where I'm doing well, keep doing it. What do I need to improve upon? And really, as working with folks like your team or other folks out there that can advise you, you find ways to improve those reds to yellows and those yellows to greens.
Right. One of the things that I've really appreciated about that too, Wayne, is that, when you're a growth strategist, you have experience, you have your facts, you have your data, you have your anecdotal stories, right? And so you can say this is the roadmap that we're going to do strategically. But one of the things about when we bring the investor grade assessment into it, now we're really like, hey, we're looking through this through the investor's lens now. So we can take our facts, we can take our data, we can take your vision and your anecdotes, but now we're going to couple that with really a grade that says, here's how far, here's how close you are from, where you want to be.
That's exactly right. And so when we look at investors out there, whether it be private equity or strategic investors that one day that founder owners are looking to partner with, they've got certain criteria they're looking at. And there's certain things that you'd need to do to be at the bar, to be ready to go to market. And then as you raise those other elements of your business, you're increasing the market value of your business, just like you increase the stock price. And so it's really how do you work through that to maximize the value of what you built?
What do you think when, because you've had hundreds and hundreds and hundreds of founders take take the investor grade assessment. What do you think have been some of the biggest insights that you all have gained in terms of founders being prepared or being investor grade ready? What have you kind of seen in your journey with it?
Yeah, it's really interesting because we all, as founder owners, you have different areas of expertise where you can go deep. Sometimes if it's growth, we find that folks score a little bit lower on that growth. They don't necessarily have a plan for what is my go forward prototype on my concept. Where are my new markets that I want to expand to? How do I measure that growth? So growth is an area that a lot of times we find that. Another one is the not as exciting, financials and accounting. Nobody likes to talk about that a lot. But do you close your books on time? Do you have a monthly close on your balance sheet? Are you able to get access to those numbers within 15 days after closing? That's an element. We find that with investors, the greatest area of focus that they have is on you and your team. So really understanding the strength of what you and your bench can do, because they want to invest in a business that really is built to last, that's built for the future. And when you've got that team below you that can drive things where not all the decisions are going through you, or if you want to go on vacation, go to Europe for a month, the business will be okay. That's a critical one. So I'd say the growth, the financials, and the team are 3 really important areas that pop.
I love that so much because I think that sometimes in working with founders, they become very founder centric, right? And so the idea of having a team to scale with, and we always have the conversation, look, we're not adding executives and experiences to your team so you can open more restaurants. We're adding them to your team so you can build a company that can open more restaurants, which is how you can create more value, right? So what do you find when you're having those kind of conversations with founders?
Yeah, so one area that we talk a lot about growth because when we're helping a business prepare for that growth, we'll talk through, we had a residential services business that was looking to go to market, and they didn't have a plan for where am I going to grow, how am I going to grow. It was kind of an ad hoc area. They didn't know, am I going to build these on my own? Am I going to buy other locations? And so really just going through that process of first figuring out what works best, and then how do you repeat that? How do you create a flywheel effect to grow on that? And when we built this plan with this company, it was a key part of when we took them to market, we were able to get them a top level multiple for the segment they were in because investors saw that and they said there's a clear growth strategy. And the exciting thing too was I actually talked to that business owner a couple days ago. He's ahead of schedule on that strategy with his new partner. So it's not just, we're not in the business of just packaging businesses for a process and for a sale, but let's build plans that really make sense.
Yeah, that's one of the things that I really appreciate about you, Wayne, and the whole team at Founders Advisors is that you truly are looking to build that long-term relationship. There may be an event or a transaction, but one of the things that I've always been impressed about is the long-term relationships you build because people, they may sell one business and they may start another one, but they always come back to Founders Advisors, which I think is a very powerful testament about you and the entire team there.
Well, we appreciate that, and that's why we love doing things with you, Kathleen. You're the same way. We came from the same background,
I
so
know it's so,
definitely
it's
aligned with that. I'll
absolutely.
yeah, I'll share one other story related to that
Yeah.
founder who I spoke to a couple days ago. The company that bought his business, they're now looking to buy another company that we're marketing. So we're not just looking to build relationships on the client side, also on the investor side too.
Yeah, that's fantastic. Thanks for that, Wayne. Hey, Wayne, I am curious though. So let's say that they, when you think about what the founders gain, right? So it's really about looking at growth, looking at finance, looking at the team. But when you, from your experience working with founders, when you start to think about being investment grade ready and they look at that assessment, what do you see as their blind spots? Because I always kind of find that people don't want to talk about finance because it's not a language they speak every day, and then they don't want to look like they don't know what they're doing in their multi-million dollar business. But what do you see as blind spots when people take the investment grade assessment?
Yeah, it's really, I love the word blind spots because it's really around, you know what you know really well and you're an expert at it. So if you've built your own, multi-unit organization, you know what you're doing. And those blind spots vary. I'd say one of the biggest ones that we see is really around culture. That's something that when it's founder centric and it's all about, because the founder really becomes that culture. There's not a broader culture out there. So I'll give you an example of a company we partnered with, South Block. Amir was the founder of South Block, and he did not have that as a blind spot. If you ever want to learn about culture, you need to go talk to Amir because he knew what it took to build that. When you identify people, when you hire, you're training them, you're onboarding them. There's a clear culture, and with him, he sells a lot of kale, and his motto is "Kale, yeah." And everybody in that organization, when they end a meeting, they all yell "Kale, yeah," and it's exciting. There are other brands out there that don't focus on culture, and there's some that'll surprise you. I'll throw out Starbucks as an example. I was at Starbucks this morning, 6 a.m. I'm getting my coffee and my meal, and they just went through a whole retraining of the whole organization at Starbucks to really get after things. And when you come in at face value, I'm starting to see a more connective experience at Starbucks. But I was the only customer there. Guess where the associates were parking their cars at Starbucks? They were in the closest parking spots right there. So it's one thing to have culture on a PowerPoint, culture on your website, but are you living that culture? Are you bringing in people that really live that out? So culture is something that I know is important to you as well as you advise folks. That's one where it can be a blind spot.
Wayne, I think probably what's interesting for people listening right now is that we have founders advisors, we're talking about finance, and yet the conversation is really coming back to the team and culture, right? And in our practice, we call it TCL, teach, coach, and lead your culture. Because if you can't teach it, you can't coach it, you can't lead it, then back to your point, you have it as a PowerPoint. And you only show those PowerPoints, you have to be able to live it and lead it, as opposed to just tell everybody this is what we do. But I love your illustration with Amir and what he's doing at South Block. I mean, I always, whenever I talk to Amir, I'm like, hell yeah. But it's really genuine and sincere. And he pulls it all the way through with their guiding principles and the design shoes he rolls out every year. I mean, he truly, not only does he teach, coach, and lead it, but their whole company by design teach, coaches, and leads it too.
Yeah, there's not a space between what they're doing and what they're feeling and how they're wired. And when you can have harmony with that, that's how you win as a business.
Oh my gosh. I hope that people are taking notes, and I also hope that they're putting their calendar down, got it out to mark February 2nd through the 4th because they can spend more time with you, Wayne, and the whole team. So if you're not doing that, please take out something and start taking notes on this right now because I think this is so valuable. And that's why I want to talk about a couple of other things, Wayne, about, kind of your perspective on, it's a very dynamic market right now, and there's a lot literally swirling out there about what's the market, what are people looking for, is this a good time, is this a bad time, should I try to time the market, which I find fascinating as a statement in of itself.
Mm-hmm.
But when you think about where the market is, and let's say I'm a founder of a multi-unit restaurant chain, and I do have aspirations of wanting to accelerate my growth, what should I be thinking about in this market right now?
Yeah, so I'll talk about the market first, and then I'll talk about what a founder owner can do to
Got it.
really be best positioned in this market. We can break it out that way. And the first thing I'd say is I'm going to use the word separation. There's a separation in the market today. Let's start with the consumer as an analogy. The haves, look at the stock market. We have record stock market prices. The higher income consumer is doing better and better and better. And the challenging thing is the lower income consumers, they're having a harder and harder time. So there's this separation demographically, what's going on in our economy. We're seeing something similar as well with businesses, consumer businesses that we're talking to all the time. Of if you're an investment grade business, you're firing on all cylinders, and you have a path to growth, you have profitability, you got a great team. Those businesses, the bar is even a little bit higher for where you are investment grade. And then there's a larger group that are it's a tough market right now, especially for restaurants. It's not an easy market for everybody. So it's really, there's this separation that we're seeing. So the question is, well, how do I stand out as I prepare my business? One day I want to go find a partner. What do I need to do? And the good thing is those metrics, they don't change. So you don't need to change what you're doing. You do need to know, where do I stand today? Where do I have gaps? And where do I need to improve? But those metrics on what matters most, things like, are my sales growing? How am I doing on my AUVs? Am I, when I open a new restaurant, a new concept, how quickly am I paying, what are my cash on cash returns? What's my payback period? Am I less than 3 years? A lot of folks are looking for kind of that metric. What are my margins? And then what's my growth plan? So those are the things that we see are really separating folks and helping them stand out in today's market. So that's really where things are. The good news is there's plenty of dry powder out there. There's plenty of investment, but the bar has gone up a bit.
And I think, and to Wayne, when I take what you're saying, like when you're thinking about, are you tracking on your sales? Are you tracking on your AUVs? Do you understand your cash on cash return, your return on invested capital? Also you actually have a plan that's not in your head, but written down and validated with,
Right.
documentation and financial workbooks that support that. But is that also to say that, hey, these are best practices in any economy that anyone should be doing? Because in reality, as a founder-led business that's looking to scale and grow, I should always be investor grade ready. What would you say to that?
I agree 100%. You're spot on. And we're never going to score 100% being investment grade ready. There's always areas that you can improve upon. So it's really around, refining. The great thing about having multiple locations for those founders that have multi-unit is you can look at what's working, what's not working in each location. And you can really think through, okay, what is my optimal staffing plan? What is my optimal size and layout and configuration? What have I tested in my menu that works best? You can really test and learn and build that optimal, that optimal concept to really scale. And so that's what's exciting. You can always get better.
Right. I think that's a language we both share, is that it's got to be leadership with intentionality. right?
Hmm.
Not leading for the sake of leading, but really leading it intentionally with your growth, with your team, but optimizing your business so that it's not just about like, hey, how much should we make? It's more about how much are we making that's adding, how much are we making that's adding value? Are we working on things that are creating value, or are we just working on things because we're working on things and we really don't really know how it connects at that point?
Well, I'm glad you said the word value because value is so important in this economy. If you don't have value, you're not going to win. I mean, look at what Chili's did this last 6 months as they've, come from
On
a
fire.
really tough spot to
Right.
turning things around. They came up with, a great value offering, and value is so important, but it's got to start from the top down. It can't just be the entrepreneur, the owner's vision. Everyone has to understand it. They need to know where they fit into that vision, and that way they can be a part of it. And they're going to be, those are the kind of associates too. We go back to what we talked about before. They're going to park in the back because they know the customer comes first. Everything we do, the customer has to come first.
Right, right. So Wayne, that makes an interesting conversation. You say about this separation, right? So we have some people, some multi-unit brands that are ready at this point. But I think Chili's is a great illustration. A lot of people are like, oh, they've run their course. They're going to go the way of TGI Fridays. They are too big and they will fail. But yet, great leadership, great investments, great intentionality, great results. So, would you say that even if I took that investor grade assessment, and let's say I didn't have an exceptional score, it doesn't mean I'm out of the game. But what does it mean that I should do?
Yeah, and that's where I'd recommend that somebody talk, folks should be talking to you or people that do what you do because you're an expert in the space and you can advise them on, okay, here's how I scored across all these dimensions and I've got these 5 red areas I need to focus on. Because of your expertise and what you've done, you can help them, okay, let me prioritize. Because it's easy to get overwhelmed and say, oh, I'm a 50 or I'm a 55 out of 100. What do I do? But it's really talking to an expert to know where to prioritize. If you don't have a phenomenal, customer experience, if you don't have a clean restaurant, if you're not, delivering on convenience and speed, those are, and you got to have a phenomenal product, which is the most important thing. If you don't have those things, you're not going to win. But how do I prioritize where I'm at today versus where I need to go?
Yeah, well, thank you for the kudos. Because I agree with you. I think when you go and get the expertise and help, it helps the founder just stay clear, keep things prioritized, and keeps things intentional, right? And when I think about some of the founders that we've had on the Founderology podcast, they've all said that. I went out and I sought outside help because everybody in the team knew what the team knew, but we needed somebody. And whether that was they hired an outside resource or they actually hired someone to come in, but making that investment in your business to create your business to be investment ready is, I think, in any economy is a sound strategy. I'm not just saying that for my own, I'm just saying that I even advise my own clients when we get to a certain point, hey, it's time to go out and get the leader that's going to take it to the next level.
Agree. I'll give you a story a long time ago. This was in the late 90s. I was a consultant and we worked for PetSmart. And the stock price was at $2 a share. And they had dog food piled up to the ceiling. They had an IT ERP rollout that wasn't working with SAP. They just didn't have a clear focus. And I was fortunate enough to be a part of a team. I was young in my career. And we turned that retailer around and we helped them focus on customer service. We helped them focus on lifetime value of the pet owner, and we helped them reprioritize their initiatives. And that took PetSmart from a $2 stock from a $25 stock. So take that analogy for a publicly traded company. How do you do that for a private company? It is, if you can find an expert to help you, it will help you identify some blind spots you may have and
Yeah.
and a plan to get after them.
We talk a lot about always build your strategic plan from a position of purpose as opposed to a position of pain. Pain is just masking, it's incremental thinking to get you out of the pain that you're in, but it still won't get you to where you want to be. But when you know what you're looking to achieve, build it with purpose, intentionality,
Love
and
that.
and value, right? Like you've got to be creating value for everyone in your ecosystem for it to work.
Yeah, and you have to have the why. The purpose is so important. If you don't have
Right.
a why and your team doesn't have a why, the founder of Varsity Spirit Cheerleading, I remember when he interviewed me before I joined the company, Jeff Webb. He was always about, "What's your why? I want to hear about your why." So if you
Right.
know anybody that was ever a cheerleader, I guarantee you they know about the why. If you think about a cheerleader on a high school campus, they are the why. That's why you're there, which is school spirit, empowerment, and all that. So it's
Right.
a big believer of the purpose and the why.
Absolutely. So, Wayne, if you're, we have a lot of multi-unit founders and others and leaders that listen to the Founderology podcast. And if you were going to give somebody some insights or some advice, if they were looking to go make a financial transaction of some sort within the next 12 to 24 months, what would be one thing you would say to them? Hey, look, if you're going to go pursue that path right now, because to your point, there is a lot of capital sitting on the sidelines. It just wants to invest, I think, in things that are a bit more predictable and stable. But if you're going to give somebody some advice right now, what would you tell them to be thinking about as they kind of get, as they're putting their growth plans together?
Yeah, so we just had a conversation with a client this morning who's about to go to market in the next few months. So I know you asked 12 to 24 months, but I think it applies, which is the financials. I am going to sound like an investment banker now with this answer. Won't be talking about culture. Financials do matter. When you're ready to go to market, there are three things that need to happen when you decide to say, hey, I'm going to go find a financial partner. Number one, you need to have a strong macro environment. You need to have, the market that you're in needs to be doing well. And so there's certain segments within restaurants that are doing quite well, like a fast casual franchisor. You've got examples like Freddy's Frozen Custard that just had a very successful exit and sale. And so how are you doing with folks like that? Are you in that right sector at the right time? The next is personally, as a founder owner, is now the right time for you to go do something? Does it fit with your own personal plan? And then the third topic is financials, and I'll talk about where I started. Your financial performance. You don't want to go to market. Let's say your business has been growing for 3 years, and then you take a hit in your financials. Clearly, that's not the time you want to go to market. You want to have a clear path to, hey, over the next 6 months, we're going to continue this upward trend, both in sales and profits, so that when you are going through that process and you're speaking with investors, you're doing it from confidence and from a place of strength. Because when we run a process, we're talking to 10, 20 potential investors at a time. They're competing against each other for your business. And the stronger your results are performing, the higher the multiple will ultimately be. So the financials, have a strong financial forecast for the next 6 months. Make sure that your openings are hitting the hurdles that you want to hit, those weekly, monthly sales targets. Make sure your four-wall margins for each location, you're hitting those. And if you do that, that is the most important thing. And the final thing I'll say is, once you decide to go run a process, make sure you continue to deliver the results, because the worst thing that can happen is you have a letter of intent, you found a buyer, you're exclusive, and then the results go down and you've got to retrade the deal for a lower price. You never want to have that happen. So financials are very important.
Right. So a couple things, if I could. So just to recap that, it's really understanding your financial performance and the trajectory of it as you're going forward, making sure that it's strong, stable, growing. Recognize the macro environment, and is it positive for your segment at that time? And fast casual, definitely. Fast casual franchisor, definitely a great segment. And then also find out where you are personally, and then really key in on. I don't know how, I'm not an investment banker, but I do talk a lot about those metrics that matter, because it's one thing to open a restaurant. Everyone's like, look, we opened a restaurant. Right, but if the payback takes 5 years, in 3 years, when you go to look for more funding, that is going to come back to haunt you. And people are like, what are you talking about? And I'm like, because it's got to be, isn't the magic number under, you have to have that cash on cash return under 3 years?
That's exactly what it is. That's an
Yeah.
investor's looking for that less than 3 years. And that's why, I'll name another one, a Dave's Hot Chicken. That's another
Oh,
franchisor that recently,
yeah.
sold to Rourke Capital, had a very successful transaction there. You've got an even lower cash on cash return there, because as a franchisor, the franchisee is really putting in most of that investment. So that's why those assets are doing really well.
Well, and by the way, we have the founders of Dave's Hot Chicken and the president and CEO, Jim Bick, speaking at the Founderology Growth Summit. So thank you for that plug, Wayne, because they're going to talk
I'd
about
love
it.
to say that I knew that. I actually didn't know that. So just
Well,
I'll be real.
it's the greatest thing ever, because they're going to talk about how they went from 2017 making $900 in an alley 2025 selling for $1 billion. I mean, come
It,
on, who doesn't want to know that story, right?
you could not have a better presenter. That's awesome. That's another reason people should be coming.
Absolutely, absolutely. Wayne, I'm also curious too, when you think about founders, and as they think about, like, I do want to ask you one question about founders, though. I find sometimes when we work with founders that we do have an issue when we start to talk about financials. And I'll tell you our experience. Our experience is when we start to talk about financials, they don't want to talk about financials. And I think my hypothesis is because it's the one scorecard that a founder can't hide from. You're up, you're down, but man, that is the one. Everybody could tell you that they love you, but you know at 2 a.m. that that's your scorecard, right? Right. The other reason why I think they don't like to talk about it is because sometimes when they talk to financial advisors that they're using a lot of terminology that's not used every day. So they don't want to appear that they can't speak that language. But then the third thing that I find is that if the results aren't there, but they're a high profile person and then the results aren't there, they feel a little like emperor with no clothes. So we try to rip that band-aid off to have that discussion as quickly as possible because we want to make it okay. Because if we know where we are, we know what to do with it. How do you work with founders to help them get past some of those, financial, I don't want to call it fears, but hesitations to really talk about it? Because look, if founders were financial experts, then they'd have your role. You know what I mean? But that's not how they're all wired. So how do you help founders kind of start to codify or to better understand the connectivity between their decision making at this size and what that means later when they go to try to sell or have some sort of exit or some sort of transaction?
Yeah, the first thing is you've got to, as everybody knows, you need to have a really strong relationship and trust with someone when you start talking financials. Because if I own a business, I may think, well, I'm the smartest person in the room every meeting I have all day. I don't want to not be the smartest person in the room. So there needs to be that trust with folks advising you to say, hey, I don't know what that is. And I know it seems like a simple thing, but you need to have that trust so that, and the right advisors, they're going to understand that, they're going to explain things. So you need to understand it. In terms of like, you mentioned the emperor with no clothes of, let's say results aren't going well, and you just need to be real about that. It's that is part of leadership. I mean, part of leadership is you confront the brutal facts of, hey, this is reality. This is where we're at. And I think it's critical. All successful businesses over time that I've seen, you look at the facts and you base your decisions on the facts. And that's really the right financial fact base that you have is going to help you be successful, and use that to partner, use it as a tool for where you want to go, and not to be, oh my gosh, I don't understand all these metrics. That's where folks like you or folks in the finance industry can be really helpful.
Yeah, that's really, really good. All right. So, Wayne, in your career, you have worked with some amazing founders, amazing leaders, some of even the names that we're talking about right here. You've also done some transactions with some outstanding leaders in the industry. So when you think about it, when you think about leadership qualities for founders who scale successfully, have successful transactions, have successful exits, what do you think are some of the leadership traits you have seen that have really embodied those, that those founders have embodied that have helped them on their journey?
Yeah, and a lot of my background is more Fortune 500 type companies, so I'm going to lean more on that. But it's interesting because those same qualities of Fortune 500 CEOs, those same successful qualities are what I see in founder owners that drive success. The first one came from Ken May. He was the CEO of FedEx Kinko's. So FedEx had just acquired Kinko's. They were integrating those two companies together, and I was leading the new store opening program. We had the goal of opening 200 stores in the first year, and we were eventually going to open up 2,000 stores over 5 years. And so I led that program, and I'm an early riser. I was in my office at 6:30, the only one there. And Ken May calls me at my desk, and I was like 4 levels below the CEO. And he calls me, he's like, Wayne, I just want to tell you how much I appreciate what you're doing. And I didn't even think the guy knew my name. And so Ken May is one of these level 5 leaders that really cares about their people, wants to influence them and motivate them. And I think that empathy is really important. Another Another skill I was thinking about came from Marvin Ellison. So Marvin is the CEO of Lowe's Home Improvement, and I actually worked for Marvin when I was at J.C. Penney, and we were having a conversation, and I was actually leaving for another opportunity, but I wanted to talk to him before I was leaving the company. I said, Marvin, we just finished rolling out appliances, and we did this and this and this together. What advice do you have for me? And this is a guy who started at Target. His first job ever was sweeping floors at Target. Grew up in a rural part of Tennessee, and he worked his way up. He's now CEO of a $100 billion company. I'm asking Marvin, like, Marvin, what advice for you? And he said, you need to have more grit, Wayne. I'd been a former consultant. I wasn't a roll up your sleeves person at that point in my career. And he mentioned grit. If you look at what he's done and where he's at today, it's phenomenal. And to be leading the number two home improvement retailer. So I'd say empathy and grit are two qualities that I think really serve leaders well. And I see that with entrepreneurs. The individual I talked about, the residential services guy I was talking to a couple days ago, I was asking him about his day. He was grinding all day. The guy has grit. So
Right, right. And it's so important because it's they can coexist together, you know. You can
I,
have and in the middle is resilience, right? Because you get them all going and they can all coexist, but it's important to have all of that going for the engine to move as efficiently and as effectively as possible.
yeah, I love that word resilience. I'm writing that one down.
Yeah,
It's good.
I wrote down grit and empathy, so we're in a good spot. When we've kind of hit on it a little bit, but I want to just kind of go back and put a finer point on this. But when you think about the successful founders that you're working with today, what would you say have been the people or the resources in their inner circle that have helped them to get to where they've been, to get them to where they're talking to you about having a transaction or a sale? What do you think their inner circle looks like?
Yeah, the first thing I'll say is you need to have a strong controller or finance person. We talked about the financials earlier. You need to have someone that's giving you both on a monthly reporting basis, your P&L, your balance sheet, but also KPIs on your business, key performance indicators. How are my comp sales doing? How are my food costs? How are my margins? Things like that. How am I doing? That's critical. And then outside of your company, it's really important to have a good wealth manager. As you're building, your number one asset a lot of times is the business you own. To have a wealth advisor that's helping you think for the future, that's a critical role. You need to have somebody that's helping you find gaps. And we talked about the IGA assessment, a consultant or just a third party expert in areas that you're needing to improve your business. And then we do think it's important that if you are looking to go raise money one day, find an investment banker that fits well for what you do, someone that can, skate to where the puck's going, as Wayne Gretzky said. If you want to sell in 3 years, start building a plan towards that. And I'll share a little secret. Investment bankers will do free work for you. You don't owe them a dime, but they can give you advice. And I'm sure you can think of examples of that, Kathleen, where we've done that. So that's where I'd say surround yourself with those folks.
Yeah, I think Wayne, that's actually where our relationship started, was that I had clients that wanted to speak to an investment banker. They didn't know if they were ready or not ready. They didn't know where they were on kind of the continuum of readiness. And one of the things that I've always found so great about you and the whole team there was, I literally picked up the phone and said, I don't know where they are on the continuum either, but I know they have something very special here. And that's what started that conversation. And one of the things, to your point, is your team gave such amazing feedback that it helped the founder really kind of rethink where they were, because I think they thought they were much further down. Then they found out that there was more work to be done. But wow, the insights they gained really put them on a great path. And I think that you're right. That's one of the great things to, I think sometimes people want to get everything perfect because they don't want to go talk to the banker or anybody else because they're going to find out like they're missing the form. And I'm like, oh my God, just start the conversation so that you just know where you are, because then you can start running to where you need to be. So
Well, and
that's
you
really
mentioned
good advice.
priority. You mentioned prioritization as well. You need to talk to experts outside of your four walls to what should I
Right.
prioritize on, like we talked about.
Absolutely. So, Wayne, this is what I'm really excited about. The Founderology Growth Summit, you're going to be there the whole time, February 2nd through the 4th. You're doing two presentations. We're doing a bonus workshop afterwards where we're really going to take a deep dive into everyone's, investor grade assessment. which I think, one, the generosity of Founders Advisor to provide this to everybody, but then two, the amount of time that you're all investing with founders over a 3-day period, unparalleled anywhere in our industry. So, I know that people that are listening to this podcast right now are like, oh my gosh, I have to take notes from what Wayne said. I have to get those dates on my calendar because I know I can leave Austin, Texas with much more, not only insights, tools, tips, and techniques, but a much better understanding of where I am with my business. So I know you and I could keep speaking for hours, as we always enjoy to do, but we're actually right to the end. So we're going to do
Okay.
we're going to do a kind of a version of the Fast Five, if you're good with that.
All right.
All
Let's
right,
go.
here we go. Besides the book that Zane wrote, what is the best book that you would tell founders that they should read?
I'll go with an older one, Good to Great by
Oh,
Jim Collins.
yep.
I know that's an older book, but it's got
Love
so
that.
many principles that I love.
Oh my gosh, the level 5 leadership. I love the hedgehog model myself, the flywheel. I'm right there with you. All right, what's one word that in your mind defines a founder who is successful in their financial transactions?
Passion.
That's a good one. All
Yeah,
right.
passion.
What is one metric that always matters no matter what?
Comp sales. Can't beat comp sales.
That's a good one. Okay, that was a good one. All right. What are you most excited about the Founderology Growth Summit?
It's in Austin, Texas, where I grew up. Austin is the best. Even though I live in Dallas, I believe Austin is the best city in the world, and I cannot imagine a better place to have it. So I'm fired up about it.
Oh my gosh, we're so fired up too about you being there. And you're going to give us some inside tips on Austin too. So I'm very excited about that too. And then, Wayne, if you had to complete this one sentence, the sentence goes like this: a founder is built to break through when they dot dot dot. A founder is ready to be built to break through when they're dot dot dot. What would your dot 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 be?
Have the right support around them. You think about their team that they have in their business, but also their family. We haven't talked about family at all on this call.
Yeah.
Having that support network at home, because what founders do is tough, and you need that place to go home and have that support.
Oh, that mic drop on that, Wayne. That was fantastic. Thank you so much. And Wayne, I just want to really say, really seriously, thank you so much for your time today. Thank you for the support that you provide founders every day. And most assuredly, thank you for your support, generosity, and just everything you're going to be bringing to the Founderology Growth Summit, too. I think this is going to be just a game-changing. I always believe this, but I really know with this I've seen it live in person several times with the investor grade assessment, but also when people interact with you and the team, how it transforms their vision to moving towards greater value for themselves, their businesses, their team members, and their families. So I'm really excited about that. But I want to say thank you so much for joining us today. Thank you so much for sharing with so much generosity today. But most assuredly, thank you for continuing to be on the journey with us as we move forward.
Well, I've loved it, and Kathleen, thanks for what you're doing. This is a movement, what you're doing with Founderology, and I'm just grateful to be a part of it. Thank you.
Well, thank you. We do think about it as a movement, and we really think about it as making unity through community. And the more
Love it.
people that we can bring together, I love that saying someone said that your net worth is equal to your network. And I don't always think that it's about your net worth, just financial, but it's the network of success that you have in life, with your family, and in business. So, I'm excited about this too. And for everyone listening, again, please mark your calendars for the Founderology Growth Summit, February 2nd through the 4th in Austin, Texas. And Wayne, if people wanted to find out more about you and Founders Advisors, where would they go to find that out?
Yeah, you can just go to our website, foundersib.com, and all the information's there. And then they also have your contact information, so feel free to connect. You can connect me to anyone that's interested.
Oh, it'd be my pleasure. So foundersib.com. They'll find out all the information. That's fantastic. All right. And for everyone that's joined us today, woo, I hope you took a lot of notes on this one and took a lot of great information down. And until the next time, go take this information and unlock the power and potential of your business to grow and to build that brand to break through. Thank you all for joining us. And thank you again, Wayne, and have a great day.